All right, a new IPO has opened. We are in the middle of IPO season. HPL Electric and Power Limited. The IPO opens today, has opened today. Gautam Seth, Joint MD, joins me on the show. Thank you so much, Mr. Seth, for coming here.
Yeah, thank you.
We have a broad idea about the company. You are into, you make meters, you make switch gears, you do LED bulbs. But what is the business like? Where does most of the revenues come from? How is it divided?
Yeah, HPL is into 4 product verticals, which is metering, switch gears, LED lighting, and wires and cables. And in terms of our revenue breakup, metering is the biggest with 49% market share, and lighting comes in, which is mainly the LED lighting, which is at 23%. The switch gears are at 15%, and wires and cables at 13%.
Okay. In terms of all these verticals, who are your main competitors? In metering, who would be your main competitor? Who are you basically trying to
there are a lot of competition what we have in the market, but meter typically has a limited competition because not many players are today there as compared to, if you see, about 10 years back we had over 30 to 40 players in metering. But over the years, as the technology has moved up, and that's when we have seen a lot of competition thin out, the market share have been very much consolidated. So there are now a very handful of limited number of players in the metering. As in switch gears or others, there are of course much more. We have all the multinational companies, we have certain Indian companies who are still strong. So in terms of the competitive scenario, it's the sector is, yes, it's moving up high on technology, and a lot of competition is there. And as HPL, because we have quite an integrated manufacturing, we have our own R&D centers, we have around 100 people working in the R&D. So in terms of our strengths, we are pretty competitive and looking to take on the market in a bigger way.
Okay, why are you raising the money? What are you going to use it for?
Yeah, our primary purpose is that since, over the last 5 years, HPL has invested over 230 crores in the capex. We have built 3 new manufacturing units. We have a lot of upgradation done on our manufacturing processes. There is a lot of automation what has now gone into our manufacturing. So in terms of those kind of investments what we have done, so now looking to when we are raising the capital through the IPO, we are looking to repay our term debt of 130 crores. 180 crores would be utilized as margin money for working capital, and the balance for general corporate purpose, which would be mainly for the brand building purposes.
Okay, that is interesting. Brand building, there is a bit of a brand building conflict that you're facing. We've seen a newspaper coming out from one of your competitors. An ad has come out, I'm not going to name it, but an ad has come out which says that this is a cautionary notice, we are not this. Is there a plan to differentiate the brand right now so that very clearly there is no confusion in the market?
Yeah, the brand is very much differentiated, and we have our own brand by the name of HPL. So I don't think there is any confusion nor any litigation happening on the brand issue.
Okay.
One of our promoter companies is by the name of Havells Private Limited, and which was incorporated in 1956. And so that is it, and that company is one of our promoter companies.
Okay, so that's what caused the confusion in a sense. But you don't think that there is any confusion in the investor's mind, right?
No, not at all, because if you see, we have been in the market, people know us as HPL very clearly. We have been growing over the years. So in terms of, if you see the electrical market, which is the main business, we do not see the confusion. And similarly, this is what I would believe, that if you see the institutional investors, because we have been interacting with them from so many months, and if you see we've already got our anchor book response, and from both domestic funds as well as the FIIs. So I don't think today even the retail investor is very much informed. So I do not see any confusion that would come in the market, or that is even coming in the market. And in terms of any brand, anyway, the brands are different, so it doesn't make any difference to either of us.
Okay, but let me come back to the business itself. The 4 verticals, in terms of a product mix, what are the strategies? Are some basically volume plays, some high margin plays? Could you just explain that to us a little bit?
Yeah, if you see, there are a lot of growth drivers what we have, and that's the opportunity what HPL Electric can encash today. In terms of metering, we are looking at the smart meters come in a big way. We see the market exploding in a different manner, because that is actually going to change the way metering is done, the way that will bring in a better efficiency in the whole system to the utilities as well as to the consumers. If you see switchgears, we are looking at the government schemes of affordable housing.
I'm sorry to interrupt you there, Mr. Seth. The metering business, how does it work? Do you sell directly to consumers, or does a distribution company, a discom, come and sign up a contract with you that you are going to supply these meters? They'll charge the consumer, but they'll go and replace them.
Yes, the main customer in the metering is the discom, and if you see from our own revenues, about 70 to 75% goes to the utilities. Okay. And the balance goes in to the consumers through our trade channel. As you are aware, we have over 2,400 dealers and distributors. We have over 15,000 retailers. So that's an enormous amount of pan-India retail channel what we have. So our meter products mainly go to the utility, but also the institutions or even the private sector, being it any hotels, malls, industries, they also end up using a lot of metering.
But I'm assuming when you have these bulk deals with discoms, and as electricity spreads through India, which is one of the things that the Prime Minister has on his agenda, the margins would tend to be squeezed a little bit, right? On a bulk lead, it would rather be volume than margin?
No, on the contrary, if you see in the last few years, because as I was saying earlier, there were many players in the metering industry, and over the years, because the way the technology has moved up, we've had a lot of players leave the industry. So now there are about 4 to 5 players who are actually having about 80% of the business.
Market share. Okay.
So in terms of margins, even if you see our EBIT margins, it's about 19%, which is quite a healthy
That's the
percentage.
Blended margin across all the verticals? Or just the metering?
No, we're talking about meters standalone.
Meters, okay. And if I take the blended margins across all verticals, what happens?
Yeah, our EBITDA on FY16 is at about 169 crores, which is about 14.2%. So which again is quite comparable with the industry.
All right, you mentioned EBIT at 19. How much is the depreciation? If I take EBITDA in the metering business, what happens? Because you told us 14% EBITDA overall blended. What is the EBITDA in the metering business?
I won't have the figures right away,
right,
but our total depreciation as a company is about 22 crores.
Okay, all right, fair enough. Now, which side of this business do you want to expand in to improve margins? Is there going to be change in the product mix, or you plan to expand across the board?
Yeah, going forward, of course, we see a very large amount of growth coming across all the 4 product verticals. And but mainly if you see, the LED lighting is set for a very big growth. In terms of the industry size, as per even global research firms like Frost & Sullivan, a 3,000 crore market of FY15 is expected to go to 31,000 crores by 2020. Okay. So that's a huge amount of jump what you see in the industry size. So LED is going to be a very big focus for the company. In terms of all other product verticals, which are switch gears, that includes both the industrial as well as the domestic switch gears, wires, and metering, again have a big upside to grow. Going forward, we see our consumer business growing in a bigger manner. Our B2C sales is, as on FY16, has even outperformed the B2B segment. And that is where we see our market expanding. We see the dealers, distribution network, the channel expanding in a very large manner. And with a better brand strategy, what we are looking to put in place to do a continuous advertising on even mass media, through the social media, and to reach out to the end consumer. That is where we see an upside for the company.
And do you have any forward-looking statements to make?
No, I'm sorry, I can't make a forward statement, but in terms of, if you see our industry, we are into the base industry, which is directly linked with the infrastructure spending, with the housing, and in fact, for a healthy GDP of any country, the growth of switchgears or metering and wires are very essential. And we are, right now, our industry is seeing a good upside from even a medium or a long-term play. It seems very good. So in terms of our timing, the way we've already done a lot of capex already, and even on a short or a medium-term basis, we do not require any further capex to happen.
What was your EPS in FY16, sir?
It's about 10.5, I think. Yeah, it's certainly over 10.
10.5, all right. But I'm assuming the equity size is going to increase now. Thank you so much for joining us. Pleasure talking to you. And thanks for coming in. And all the best with your fundraising plans. All right, a quick break. We'll be back.